2022? I think that's where we're at. Why, hello, everybody. Happy New Year. It's 2022. No, I haven't seen you in a little bit. I think the last time was Halloween. How was your holidays?
I survived. That's all I can tell you.
We all survived, didn't we? We all survived.
I can't believe it's 2022. I'm in shock.
I know. Can you just think we started this, a year ago?
Yeah.
And now look where we are at these days.
You know what's funny is being in real estate, when we do like offers and stuff, we've been in 2022 for like 2 months already. So it's like November writing offers. Like I have closings set for January.
Yeah. I've been seeing that date for a few months. Yeah. I know it is always weird at the around November, where you're like, I'm not putting anything under contract to close for this year unless I get a cash buyer at the end of the year, right? we're all trying to plan for the next year at that point. All right, so let's see what we got here, folks. See if I can actually log back into my MLS, because we're gonna do a market update or market review, I guess is the best way to say it here. Now we started off our year last year. I think we started off with like a year in review of Hampden County. So we're actually going to do another review.
A 2021 recap?
2021 recap. And I want to say, I keep wanting to say 2020 recap, right? Because all this craziness happened in 2020, but it's still crazy. So, all right. So let's, of course, my MLS kicked me out of here. I'm pulling this report right now as we speak. I'm going to do our 5-year market area review. And I have these stats. We were just talking about this 45 minutes ago. So I had everything. But we had a little technical difficulties with my other computer. So pulling everything up here. But it is actually going to be an interesting year just because of no longer, doing the same stuff at the association.
Yeah, that's something I want to talk about, like what we're looking forward to this year, what we expect, what kind of trends we hope to see, and probably stuff we don't want to see.
And some stuff we don't want to see.
I don't know. We're in a weird spot right now.
There we are. All right, let's go ahead and let's start the market review. Whoa, wrong one.
Market review.
Share my screen. Here we go. There we go.
2021.
Look at that. Yeah. Our favorite realtor, Arlene. Look at that. You've got some fans out there.
I got some fans already. I like it.
All right, so here's our market review, and we've got a bit of obviously multiple years going on here. I always like to show the last couple of years because the conversation is not about necessarily what's going on today, but how it's relative to the past market in the past couple of years. So let's see what we've got here. The end of hold on here. Oh, of course, I grabbed the wrong one.
All right.
Hold on. I'm pulling it up right now.
In a while. It's been a couple months. So I turn on my computer and I go like, what am I supposed to be doing right now? I know. Forgot about our setup. So give us a few minutes.
Hola. Hello. Here she is. All right, here we go. That was interesting. Did you respond with a thank you to somebody?
Yeah.
And it showed up from everybody, right?
Yep. Well, that's because you made me an admin now. Before when I
yeah. So you'll get some of the same privileges I do, I guess. while we're dealing this. Yeah, blame it on the technology. I'm going to blame the meeting on the technology too, because earlier today we had some difficulty at our office get-together / meeting, and system kept kicking me out because I was, of course, working from 2 different computers, and that did not help at all. Okay, all right. This appears to be the correct report, folks. Okay, so this is the 5-year market comparison for Hampden County. That did not help at all. And let's see here. So for Hampden County, we've got listing inventory. Now, this is as of December 31st, the last day of the year. It's not a year-to-date. Some of the other stuff down here will be year-to-date stuff. But this is just a comparison in terms of the actual specific day, okay? So the 2021 ended, or 2021 ended with 219 available homes on the market. And that's just single-family homes in Hampden County. This doesn't count the surrounding counties or anything, again, just specifically to Hampden County, but it's pretty much the same trend everywhere that we're seeing this, okay? So versus the year before, we had 283 houses still on the market at that point, so that's obviously a reduction there. Less homes available at the end of the year versus the year before. And as you can see in years past, that's nothing compared to what, was like a typical market. Over 700 houses is what we were seeing. Now, 2019 was a little bit different because we were already starting to see the down, the reduction of inventory, right? We're already dealing with that problem for some time.
Doesn't that correlate with the interest rates going down significantly?
Yep. Yep, exactly. So we see, again, some change happen here, but then we've got drastic changes. And that was, obviously we went through with COVID, the world changing. And that just kind of exacerbated a lot of issues that we already had in terms of the inventory issues. And now we've, again, ended 2020 with just 219 houses on the market. Now, again, this is specific to that one day, though. Yep.
Well, that's that one day. But this is to all those people that in the last month told me that it seems like the market is cooling down.
Hey, for a moment there, I was thinking it was cooling down, and actually, it wasn't. Okay, because this is when you have to think about it, right? It comes down to the seasons, the market being cyclical, right? So it was slowing down in comparison to the beginning of the year, which was the spring market, right? But it wasn't slowing down in comparison to last year or the year before in terms of the number of buyers out there. It was actually increasing. And we even talked about that earlier today. You can see that in areas like the listings that actually came on the market, right? So we have less houses that actually came on the market last year. 4,776 single families came on the market in 2021 in Hampden County. There was more than that came before. And obviously we saw that there was way more, in other years, but there was more last year. But what's interesting is that when you go to units sold, so again, less houses on the market, and then we have an increase in the number of houses sold. So normally people will look at that and say, oh, well, less houses on the market, so you're going to have less sales. No. There was less houses, so you would expect less sales if the demand was the same. Yeah. But the demand increased, right? So we had way more people out there. That has always been a problem that we've been dealing with. Maybe I can't say always, because obviously, in the 08 market, that was much different than now, but it's something that we've been dealing with for a very, very long time. All right. So this I thought was absolutely crazy. The absorption rate and the month supply of inventory. That in Hampden County, we're down to 0.61 months supply of homes. So again, as we all know, because I'm sure you all remember me talking about this before,
anytime.
If no new houses come on the market, based on the rate of sale, the number of houses that are selling, all the homes would be sold in 0.61 months. And that's all of Hampden County. Okay. Last year, we were in a severe drought in terms of the number of houses, and we were at 0.8 months. And again, significant reduction. What's that, like a 25% drop?
We'd sell houses. We'd sell all our houses in what, 2.5 weeks?
Like 2.5 weeks. Yeah. That
is unreal.
Get them out there. All right. So listings that actually went pending. Hold on here. Oh, average list price. That's what I was looking for. So the average list price, 293,000 versus 260 the year before. And again, that's the average list price. That's not the actual sale price. That's down here. So if we come back down here, these are actually the kind of those really important numbers. I would say the most important indicators out of all of this stuff, because this is the stuff that actually sold. Okay. So we're looking at closed units, 4,318 closed units. And again, it's just crazy because if you look back in 2017, there was only 4,000 houses that sold, and there was 727 available, 2 months supply. That was a seller's market at that point even. And now we're dealing with a situation where we're selling more houses even though less are actually on the market. Okay. The average days on the market is down to 34 from 46 last year. The average dates to an offer is down to 20. And these are those actual prices, which I'm sure everyone is mostly interested in. What's the prices doing, right? The average sale price in Hampden County is at $299,140, right? So that's almost a $40,000 increase. It's like 38 and some change, but it was close. And if I had told you last year in December, like, hey, expect the average price to go up another 40 grand after it had already gone up, 30 or 25 the year before, would you have expected that much of a bump?
Not that much, no.
No, not that much. I mean, it's absolutely crazy. And again, that just shows you the way the market is. Supply and demand. The demand is high. There's not a lot of houses out there. Yeah, what?
That's how we feel too.
Yeah, exactly. That's how we feel about this. Now, the average list price was actually not quite as high as the average sale price, which is interesting because if you look at the average list price, last year it was just below the average sale price. But look at this. This year, the average list price was $291, and again, that average sale ended up being $299. All right, and so for people that sold, as you can see, people got over 100%. This is the average sale price versus the listing price, and then the average sale price versus the original listing price. So these are people who did not do a price reduction. Mm-hmm. And then the people who did a price reduction ended up selling for even more than the asking price, because once you did that reduction, it then created that, competition or that need to then now bid on the property. So we saw, stuff like that. Now, we actually had this conversation at a meeting earlier today about the bank-owned properties. And this was kind of interesting to see that there was less than half of the number of bank owns in Hampden County than there was the year before. So, 2021, there was 50 that sold, and the year before was 102. So that's a huge drop, especially when you're looking at the years before. We never saw any 50%.
Yeah, when I first come across short sales all the time, I don't think last year I came across one where somebody wanted to see a house that was in short sale, or even a foreclosure. I don't think I showed any foreclosures. I think it was. Yep. I didn't see any of it. It's amazing.
All right, so now we're gonna go. We're gonna do multifamilies.
Oh God!
Hampden County. Don't start with the multis.
Don't start with the multifamily. Those are just so rough right now. And everybody wants to get a deal, and then you can't. It's just you're paying a ton of money. And not only that, if I can continue, not only that is people are getting premium prices with people renting at like $800 a month. They can't even cover with that.
Mm-hmm. So I got I just got an accepted offer actually on a 2-family in Springfield.
Yeah.
For an investor. We're buying it with the tenants. So that'll be interesting.
What's the rent? What are they? Are the rents okay? At least.
Yeah, I mean, they could definitely be higher. They're not market, but the numbers and everything look like they're going to work.
Well, that's what I'm saying. Like these people that are selling, they bought the house, they bought the multifamily, $150,000, and their rents are at $800 a piece. They're selling for $350,000 at $800 rent. That does not cover the mortgage. It's like you can't, and then you can only increase the tenant to rent a certain amount every year. You can't just you can't just force them to
like double it.
You can't just double it. It's like what, 10% you can increase it. So it's like, I don't know. It's really, I've had some nice houses pop up and check them out, but the rents are so low. It's just not.
Yeah. The houses are worth much more, and I mean, I have seen some scenarios like that where the buyers are going to live in it. So they're willing to, to kind of take that on in terms of paying more out of their pocket, towards that mortgage versus what they could on something else if they had a higher rent. But usually what their plan is that they're going to give them notice, and they'll, get them out and then, raise the rent at that point. And, for me, like if the rent difference is like, if you're thinking like, oh, I can get another $50 or even $100 out of it. If I then have to go, if I know the tenant, it's not going to take the increase or whatever, then you've got to give them notice to get them to leave. And then you've got to have an empty unit for a certain period of time. You then have to obviously, or typically do some updates. Maybe you don't. And then, you've got to get somebody else in there. So if, let's say you lose rent for 2 or 3 months, how long is it going to take you to make back the $100 that you were just trying to increase the rent for $100? Right. So at that point, a lot of times landlords will just keep the tenant that they know is a good tenant. Yeah.
But then your dad makes a good point here. Is like, even if the tenant wants to move, where are they going? There aren't many places to rent.
Well, that's just because there are places to rent.
But it's double what they're paying.
Yeah, exactly. That's the thing. That's the thing. A lot of people, what ends up happening is that, or at least what I'm seeing is that it's sticker shock because they haven't rented or been out in so long. And even, just like the prices of properties have gone up, right? The rents have gone up ridiculously as well in a short period of time. So, if people's income is not going up the same proportionally that it is that rents are, well, then it's going to be hurting a lot more people, than I guess, you would normally think.
It's
but
a weird time. Okay.
It is. Yeah. Especially rents, with homes, it's different, right? Because with the prices, because you're still buying, I mean, you don't have to get into the market and whatnot, so if the prices go crazy up, if you're not an owner, you're thinking, I'll just wait. But rents aren't like that. There's not like waiting to get in for the right time with rent. It's just always is what it is. And it could drastically increase from one year to another. You could be in an apartment for, $1,000. And then, the next time you go to an apartment 2 years later, it's the same size. It's going to be like $1,300. And it's like, what? That is what happened, which is a strong argument to buy because, now you're in a stable payment, right? As opposed to a stable payment, as opposed to, being subject to the fluctuations of the rental market, which I don't think I've ever heard of rents going down. Like,
ever.
Have you ever heard of the
taxes going down? No.
Crashing significantly? I mean, I know there's incentives and stuff like that, and I guess you could have rents somewhat go down, but when the market went down with multis and all that stuff after 2008, I don't remember rents going down. They went up.
I don't see an owner or landlord being like, "Hey, the market's real good. Let's lower your rent." Like, if you're paying that already, why would anybody?
Yeah, once you get there, it never goes back. Exactly. So, as we're saying, these multifamilies are crazy. So we've got these multifamilies for Hampden County. This is all of Hampden County right now, guys. So in 2020, so this is just a 2 year-over-year comparison. So in 2020, there was 149. In 2021, as of December 31st, this is that last day of the year scenario again, there was 82 houses. These are multifamily specific that were on the market. That's almost a 45% decrease in inventory at that point. The absorption rate actually increased, and the month supply is down. So this is interesting because we didn't really see this as crazy in terms of buyers and sellers market. This is still a seller's market in 2020, and then 2021 it was definitely a seller's market. We had a definite drop, a 60% reduction in the month's supply of inventory. So again, that same scenario, guys, where if no new multifamilies come on the market, assuming the same rate of sale happens, everything would be gone in about a month. Okay.
I see that. I see that being kind of misleading, because my experience in the past month have been worse than what the single families. So that one month, yeah, I told you I had a cash offer over asking price, can close very quickly.
Oh, I know. Yeah.
Like that.
Still got outbid.
That to me, I was like, I put that offer in. I'm like, this is a dope offer. I'm writing with a smile on my face. Like, man, this doesn't happen like this.
I'm gonna cash this right now.
I'm gonna cash this check right now. And then to be rejected, I was like, man, this market's freaking crazy right now.
Yeah, cash is not always king, right? And especially if you end up with a multiple offer situation, right? And in that type of situation, if someone's gonna live there, a lot of times, especially if they're financing, I find, because at that point, even though you're gonna pay for it at that moment, it doesn't feel like it's your money when you're making an offer with a loan versus if you make an offer with cash. I think the feeling's a little bit different, and you're a little bit more hesitant to go crazy. Whereas with the loan, it's like, well, I don't have the money anyways. Gotta make payments. Yeah, and at that point, you're looking at the payment at that point. A lot of buyers are so to go up, $20,000 more. I mean, it's not like you're talking about $200 more on your payment. It's not necessarily as significant as you would think.
You're making a good point there. We kind of sidetrack for a second. There is, as buyers that are hesitant to go over asking price, you can't look at the actual purchase price and what you're going over. You have to look at what the monthly cost is. If that monthly cost is still within your budget, it doesn't matter if it's $50,000 over asking price. It's, if you want that house, look at that final monthly payment, because that's what you're going to be stuck with, not that big number, that 50,000 over asking. So
it's the cash flow
that's out there. That's afraid to go over asking. Don't look at what that final number is. You have to look at what that monthly cost is.
Yeah, and that's especially if you're going to be living in that property long term. If you're telling me you're moving in a year, well, then maybe. And apparently, if you bought in 2020, you could have flipped it for $40,000. Just selling. Just let me buy real quick and slip out of this a year later. But if you're going to be there long term, then again, it's that payment that's really what's going to be important, and the interest rate and all that stuff. The whole scenario there. All right. So what else do we got here? We actually had more multifamilies come on the market versus the year before, which is interesting. So 253 more that actually came on the market. And let's see, sold. Okay, so here's that important stuff. Which is this is crazy. 662 in 2020. It was a 38% increase in the number of sold multifamilies in Hampden County last year. 38% increase, 257 more properties that sold. And again, this is just the multifamily market. Okay.
That makes sense to me why that happened. If you're thinking about, if you purchase a multifamily, it's an investment. It's something that you consciously chose as an investment. A single family, you're choosing to live in it. You're not necessarily thinking about, in 20 years, I'm going to sell it for $300,000 more. You're actually living it. But a multifamily, you see a market like this, you're like, I got this house to maximize my profit. This is the time to sell it. This is the time to get rid of it and make as much money on it as possible. It makes sense why people are getting rid of them now.
No, I gotcha. The other thing I originally thought, and I was gonna see if I could pull the previous year numbers real quick, was that we had a lot of delay and stuff in 2020. when it came to the eviction moratorium, being able to close on multifamily houses that were occupied because nobody could move and because of, just what was going on in the world. So I suspect some of this is just people who would have sold in 2020
are selling in 2021
and then ended up in 2021. Right.
So can we look at 2019?
Yeah, we can. I'm gonna actually
pull that. 2018 kind of give us that.
Yeah. So that, and I actually meant to do the 5-year when I pulled this, but of course, I got technical difficulties. So we're gonna do Hampden County. Bam. Run that report. And hold on here. Lost my music for a second. All right. Let's see. Come on. We got you. It's thinking, folks. Your report is loading and may take a moment. I know, right? Freaking technology. Why can't you be faster?
Well, compared to when we first had the internet.
Oh my goodness.
Man, my kids would lose their minds if they had the internet we had. Just like my daughter heard the sound and she's like, "What is that?" I'm like, "That is the internet." That was back in the 90s.
What, the AOL, the dial?
The dial-up sound? Oh man. I brought Liz to a house. This was a few weeks ago.
Oh my goodness, I did this freaking thing.
The whole house started ringing. Like they had house phones, and Olivia's with me, and she's like,
"What is going? Oh, at a showing, yes."
the whole house is ringing, and she's like in shock, like, "What's going on?" I was like, "Honey, they have a house phone." What's a house phone?
Well, of course, when you think about it, the whole house starts ringing. She's like, "How come we don't have that technology, right? The whole house don't talk to us." All right. Okay, here we go. This is what I was looking for. So we were looking at those previous years sold. Okay, so yeah, I don't know. I could be wrong.
I don't see what you're seeing.
I could be wrong. That was my, but you know what I'm saying. When 2020, there was a ton of multifamilies that we just didn't sell because we couldn't. And a lot of that got delayed. So, it's possible that what we were seeing here is a trend, an increasing trend, right? So 574, 641, 680, maybe this would have been in the 700s. And then this would have been, in the 800s at that point, so it's possible, but, or it could just very well be, like you said, the market is crazy high. And the thing with multifamily homes is that, obviously the rents have to support that price too. So even though the rents have gone up, they can only go up so much. So, with multis, I feel like there's like a cap as to how high prices can go up at any one time. Whereas single families, it can really go up as high as people are willing to pay because they're going to live there, right? Whereas a multifamily, you're limited by what the other people that are going to live in the house are going to pay. So, you could see drastic increases in single families for a lot longer, or be sustained, I guess I should say, for a lot longer than multifamilies. And this is pretty big increases as we've been seeing, right? Look at that. 2017, 172,000 was the average sale price for a multifamily in Hampden County. It's $100,000 more these days. And a decent amount of that, 30,000 of that was just in the last year alone. There were big increases before that, but the most significant one, was what, last year? Yeah. All right. So what do you, any comments, thoughts? What do you think?
Man, I don't know how much longer we can sustain this type of growth. It's really, I see it still. What was it? They said that they're expecting interest rates to change a little bit in summertime or close to summertime. So it's like, if interest rates still remain low, like we could still see this trend going up, and with low inventory, and we're not catching up. Like I don't know. It's a weird. I don't even have a prediction. I don't know how to even predict what's going to happen.
Yeah. It's supply and demand, right? So we know that demand is ridiculously high. If the rates don't go up, then, in terms of quote unquote affordability of borrowing money will be low. I don't know. It's weird because for me, and we've talked about this before, there's something that has to happen. There's got to be a major change. And I'm not talking about like Hampden County needs a major change. I'm talking about like the country needs a major change in terms of housing availability, just homes for affordable homes, really. We're not talking about mansions and stuff like this. Properties under $250,000. I mean, we've got tons and tons of people who would love to own a home, but as you see, the market's crazy. Anything under 240 or 230, starts to need more work than people are typically looking to do, and it's just there's just not enough. There's not enough out there.
I'm surprised. Recently, I have been noticing houses being built, but these houses are like $500,000 houses in areas that we shouldn't have $500,000 houses.
Well, you've seen the prices increasing. The prices are increasing, and neighborhoods are changing. And you know what? My thinking on stuff like that is, again, people are investing in those communities, right? So it may be interesting, and it's like, wow, I wouldn't have expected something like that to be built here. But once that starts happening and it happens more and more, I mean, hey, 15, 20 years, you could have a completely different neighborhood.
I agree with you. But to give you an example, and I won't specifically say the houses that they're being listed, but where my dad lives, right? Mm-hmm. The school my daughters go to.
Okay.
You know that? Across the street, they just popped up 2 houses, $500,000 a piece. Yeah. On a main road, like it's a main road. There's a school across the street. If I were ever to spend that kind of money on a house, it would not be right there. It's like that to me.
Well, but that's what you're looking for, right?
No,
based on what you're looking for, you would never buy.
I would never buy it because if I'm going to spend that kind of money, it's literally one of the houses on a main road.
Oh,
it's and it's across the street from a school that's busy, and it doesn't seem like that house should be there. It seems, and if you look at the neighborhood, it looks out of place. That neighborhood doesn't have houses like that.
I could certainly understand in terms of houses looking out of place, right? But if somebody, I guess my feeling is everyone likes something different, right? And I can tell you there are houses, and all agents have seen houses like, wow, I would never buy that house. Or I love this house, and you can't understand why your buyers don't like this house, right? Why do you not like this house? We've all got different preferences. And, for something like that, I would say, great, go ahead and build. Right. If it doesn't sell, it'll get sold at some point at whatever the price the market determines it should sell at. Right. And the only person who's really taking a risk at that point is the builder. Right. Now, the thing about these builders, though, is that they take more risk by building a smaller, lower priced house, because it actually costs them less, overall to, in terms of what their return is for what they're putting into it. They're gonna get a better return on building a bigger house. There's just more room for error too. Where on the smaller house, because a lot of the initial costs are the same. So it's not like you're doubling the cost of building it just because you're doubling the price. So I see what the strategy is there, but it's a shame because there are huge markets, and we've talked about this before. If someone was to build like a tiny home neighborhood, small, not even tiny home. Heck, if somebody was to build 900,000 square foot ranches like we already have in Springfield, we already have all over the place. So the typical ranch in Hampden County is anywhere from 9 to 1,200 square feet. And I'm not talking about the larger executive ranches. I'm talking about what like the majority of these ranches are. Exactly. You got anywhere from 9 to 1,200 square feet. It's the same setup: living room in the front, kitchen, hall with 3 bedrooms. You may or may not have a breezeway in a garage, right? So, but nobody's doing that. Nobody's doing that, and no one's taking the risk.
Your dad, he said backlog with building supplies, creating high prices. So even if they were to, if say somebody had that strategy where they were just going to pop up a bunch of ranches, the amount of money that they would have to sell those ranches for in order to make a decent profit isn't, like you said, isn't worth doing it. So we're in this we're in this weird thing. Like, we want to build, but in order for anybody to make a profit building, the houses have to be, super expensive. They have to build these bigger houses and create, and I don't know how much money they're making on, like, those $500,000 houses that I was telling you about. Is how much money are they actually making off of that? And
probably a decent amount. Yeah.
I honestly don't know, because how much? It probably cost them like $300,000 just to pop it up. And then that's not including fees and all that. So are they really, I guess $100,000 is still a ton of money, but is it really worth the time and effort and their employees?
Sounds like it is to me.
Well, obviously it is, because they're doing it. But it's like, but that's not what we need. Like you said, we need those 1,000-foot ranches that will fit the starter homes, because we need those. I know so many buyers that would just love to. They don't care if it's anything extravagant. They just want a freaking house and to call their own, and nothing crazy. And those aren't the houses that are being built. And that's sad, because
it's true. It's true. So again, those initial costs, like the lot. Mm-hmm. All right, buying that lot, if you're going to spend, 20 to 50 grand or even more, depending where you're buying it, and that initial cost is the same, whether it's a small house or the big house.
Yep.
All right. And so to me, some of this comes down to zoning reforms, right? So where we could take, lots and make them smaller, in certain areas, and maybe, make the ability to build some houses a little closer or tighter, whatever the case may be. We're ready to go to a 1,600 square foot ranch. See, look at that. They don't want that. They don't want that standard size. See, they want the executive.
which is fine. If it's a 1,600 foot ranch, that's doable as well, but it's still not, I don't know. I don't, it's still not worth building those to make an actual profit. We need some sort of like nonprofit business that wants to build houses. And
I'm sure it's happening. They're doing a whole bunch with those with the printed houses. We've got the modular stuff coming, the click together ones. Have you seen those?
Slab, your mom said no basement, the slab houses.
Yeah, slabs with no basement. So, there's a lot of different things, but nothing is mainstream yet. Nothing is being adopted everywhere. You also have a lot of obstacles when it comes to the zoning stuff. And I think the zoning is a big thing. And then the other thing is, a lot of times you find that the most available land in terms of developable stuff is in the higher priced areas, where there is land available, because, in other areas, everything's been developed and everything's already, congested, and those prices necessarily aren't as much. So when you have that situation, then sometimes it becomes a, not in my backyard type of thing. I don't want, smaller houses in an area where I've got my, my big house. But, I think that's a whole different conversation for planning and stuff like that. You're talking about, what is it? The governor's bill. We've talked about this. It was last year. I can't even remember the name of the bill now, but basically part of it was allowing towns to change their zoning rules so that they could pass zoning changes based on a 50 or majority. So 50% plus one, instead of a 2/3. So hopefully stuff like that, things will start to happen. But, even if they do, it's going to be a slow trickle effect. You have a zoning change in a town that takes a while. And it's not like you start building the next day and the houses are up. You then have to, and sometimes you may even need somebody who has the idea of wanting to do it first, and then who who's willing to go through the work to maybe even get a no, and then it's, you know, am I going to spend my time on that, or am I going to spend my time on just building a big house?
Yeah. How about we just knock down the Eastfield Mall, and there's like, how many lots can we get out of that?
Hey, they're actually talking about redeveloping, and this, you know, in terms of the you know, the housing shortage, we may start to see condos. Condos is going to be, could be a big changer now. So, and the reason we're saying condos is not in terms of we're going to be, that we'll be building, or people will be building condos, but they'll be converting things to condos. Commercial space, malls. You know, and I could be wrong, and I don't know why I thought the Eastfield Mall is supposed to be doing. Is it senior living? They're going to be doing housing, like building a housing facility. Like yeah, it's going to be apartments there. So again, you're going to have commercial spaces being redeveloped and redesigned for multiple use. You'll see situations where, you know, you might have the ability to live in the building and not have to go anywhere else, you know, for anything. You know, for example, you know, if you're living in a retrofitted mall, you could have stores in there, restaurants in the mall, and then house a portion where it's like apartments and stuff like that, where you just live.
What kind of community is that called? Like a
smart living, smart growth.
Yeah, like where you have in a small area. You don't even have to leave your area at all.
Yeah. Was that a senile living? Is that what it's called?
So we found out senile people there? Is that what you're trying to tell me?
But you know, I think that's interesting. You know, it would be cool to live in that type of situation. I mean, it's certainly not something I'm like down to do today, because I like having a yard and I like having you know, privacy in that sense. You know, especially we lived in a multifamily for a real long time, and then coming to a single family with the yard and everything was a huge change. But I could see, you know, being retired, kids are out of the house, and hey, time to downsize. Yeah, exactly. Time to downsize, and yeah, we just live at the mall. Yeah, just live at the mall. Can you just imagine that? Yep. Another Natick Mall has condos already. Yep. So it's something you're gonna start to see, and you know, in terms of how that plays out, if we're going to be talking about, you know, high end stuff, you know, senior specific or anything like that. I mean, I guess it'll depend on the area and how the building is set up in the first place.
But yeah, if we were to focus on senior living and get the older people that own houses now into the senior living
you create inventory for everyone. Yeah.
It increases. It brings another generation like inventory out that hasn't been on the market in 50 years because these people lived in it so long. And it's not that we want to boot them out, but it's time to move on.
I want to say part of the governor's bill had some stuff in it for senior housing, but you know, I'm like totally blanking on this thing right now. It's been a year.
Yeah, that's. I was just gonna say, how you doing after you had a year? You're president of the association, and craziness. Like, how has it been the last 7 days? Has it been like vacation?
It does feel a little weird. So I'm just like, I can just kind of let go.
I will tell you, we had our first meeting, our board meeting, and I had been used to you running the meeting, and I'm like, you're just sitting there like.
I was on Zoom. I'm like, yep. Howdy, folks.
He is so chill right now. I love it. It was cool, but I bet that it's definitely different for you now. Not as much responsibility.
Well, it's going to change. So I got other responsibilities. So
my responsibilities are adding up, and yours are relaxing a little bit.
Now they're backing up. Well, not really. They're just changing. So we're gonna try to, or hopefully, we'll focus just more on just the company as opposed to the association. So. Yeah, that'll be.
So now, what your load is on me. You're doing your own. Yeah, I feel like there's so much crap going on. Not crap. It's all good stuff. But I feel,
a lot of moving parts.
a lot of moving parts. I'm starting to feel a lot of the pressure that you probably have felt over the last 10 years. It's starting to
just a lot of it is there's pressure in terms of understanding everything that's happening.
Yes.
Right. And then also understanding like what you can do.
Yes.
Right. And then understanding like how we even got here, like like the history of stuff. So that's a whole different thing. And then it's like, well, then how are we going to get to where we're going? And then it's a whole nother. But hey, yeah, there you go. But I think I think you guys are going to do good.
Yeah, I mean, I woke up like January 1st, and I'm like, I think I just have to take this seriously now. Because it's been more like it's been more winging it the past few years. I'm like, you have been every time I needed to know something, like I'd go to you and be like, well, what's going on? And you'd like bam, 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 bam. I'm like, all right, I got this. I know my stuff. And now it's like, oh, I gotta do this now. I'm gonna be that.
I gotta remember that.
I'm gonna have to be that for people, is to be like, no, be the one with the information to hand out. So it's like a different perspective that I have, and a different. I mean, I have always respected you, but I have a whole different respect for you now, knowing that you like are on top of.
Yeah, but now I'm gonna let loose. Now I'm gonna be like, "What? Elias is crazy." No. What? Who is this person?
Now you're gonna call me and be like, "Did you pay attention to that meeting? What happened?"
What happened? That's funny. All right, awesome. Well, we are at 8:14. I know we talked about the market. I think we're feeling pretty good. How about you? Got anything else you want to talk about, or what are you thinking?
Just people out there that are looking for houses. Make sure you're working with good lenders. I will say that over and over and over. It's no good working with a lender because they're offering you this amazing stuff if they can't close a damn loan. So find people that especially listen to your realtor. We want to close the loan. We want the house for you. We want you to have a home, and we are going to find you the right people to get you there. So if we tell you that who you're working with, they're better out there, listen to us, because we want you to be successful.
Well, the other thing about that lender thing is you should always talk to more than one lender. If and the reason that is because I've seen situations where I've had people, I was working with a buyer, I have them talk to a lender or whatever, and they're like, oh, they don't qualify, and someone to talk to, yeah, they don't qualify, and then the buyer will come back and say, oh, I got a pre-approval from this other bank. I'm like, well, how did you get the pre-approval? And so it's not all equal in terms of the amount of homework that people will put into this. I know some lenders that will do a lot of homework up front, and I've also worked with some that they just trust whatever the buyer says, and then you find out after the fact that the buyer wasn't accurate and they actually don't qualify, or whatever the case may be. So as a buyer, you should always try to talk to more than one person anyways, because if someone's telling you can't do something and then someone is telling you can, you should definitely talk to a third person to see like, all right, what's the tiebreaker here? And talk to your agent to figure out why is it that one lender is saying you can qualify and why is it the other one saying you can't qualify? Because it could be very simple, just the particular product that the lenders are offering, as opposed to you don't qualify for a loan in general, or whatever the case may be. So there's a lot of those ins and out and little moving parts, like you said.
And it's also every lender has their own. They have their own their own criteria. So even if there's a product that you fit in one place and you don't in another, it could just be the bank themselves that have that criteria that you're not meeting. So that's why when somebody asks me who they should use as a lender, I give different options. Like, they're usually completely opposites. One could be a credit union, and one could be like a broker. They can go to different places, or they have
different opinions,
products. So, and then on top of that, they might be able to offer credits. They could do like all sorts of stuff. So if you should always check out a few different places. Which another point is, I get people that ask me this a lot, is when you go to one bank and you have them pull your credit, people are afraid to go somewhere else and have their credit pulled again because they think their credit's going to go down. And it's really insignificant. I mean, it's only a couple points that it actually goes down. But if you truly are worried about it, what I tell people is have one of them pull your credit. They have to give you that information. They mail you what your credit score is. They mail you all your stuff. You can take that to another lender and say, this is my credit information. And they can run a scenario based off what you give them. So you can at least get an idea without them actually having to pull your credit. And
there you go.
So and honestly, if you're worried about losing a couple points, then, you're probably on the edge anyways. So, I don't know.
Right on the edge. But, I've seen scenarios like that where it's just like, we just need those couple more points to qualify for something different.
Yeah.
Like we qualify now, but if I just had a couple more points, I could qualify for something different and get a better loan.
If I'm not mistaken, if you do it within a certain time frame, it doesn't really impact your credit too much. It's like a 2-week time frame.
I mean, I'm not a credit specialist here, but from what I understand, if you pull credit for different things, so let's say I pull a credit inquiry for a Home Depot card, and then a car loan, and then another credit card, and then a credit card somewhere else at another store. You're looking to get money, and right? So the credit card companies will put your score down because they think you're trying to just borrow anything. Whereas if, let's say, you're going to buy a house or car, and multiple people pull your credit for the same specific reason, then it doesn't necessarily have an effect because it's close and they can see it's this. You were just shopping.
You're trying to shop.
Comparing. Yeah. So that's how it's been explained to me. I could be wrong, but that's how I've kind of understood it. But what I do is I always tell the buyers, talk to the bank. Talk to me if you're that concerned about it. Talk to the bank, and they can tell you, because they're the ones who are pulling it and everything. And they're gonna know, from experience, what's gonna happen to your credit and all that. All right, cool.
Yeah.
Let's hold on. What did she say? It's the same reason.
Yeah, like we're just saying, if it's the same reason
pulling, you're okay.
Pulling your credit, then it should be okay. And a lot of times, like if it's an issue there, like it's usually just like a letter of explanation why your credit was pulled with XYZ bank, and you could just say I was shopping for a loan and
decided not to get it,
and I decided not to go with them, going with you, and we're done.
Yeah, exactly. Are you telling me I should go back?
Yeah. Are you identity?
All right. Anything else we got?
No, this was a good first time back. 2022.
All right.
I like it.
Well, I think we can wrap it up for today. We did get a chance to talk about the market, which is kind of what we said we would do. We didn't say we were going to do anything more special than that, did we, guys? No.
What we got for you.
That's all we got for you. All right, but I do plan on doing this more often than we've been doing it recently. I know we were hitting it hard for like the first 6 months last year. Then we took a break for the summer.
Yeah.
We came back for like 3 more episodes. And then we hit Halloween. And then we were like, oh, we got too much stuff going. It's too busy. It was just too busy.
Yeah. November and December were just like, I don't even know what happened. They were insane.
It was too busy. So the plan is to try to do a little bit of a routine here. Hopefully we'll do routine market updates, and we'll have some other topics and some games, interesting things. Some of that stuff I pulled earlier today was some of the stuff that I was thinking about, like the weird facts and stuff like that. So hopefully we'll get into some of that this year. As always, you could reach out to us if you're looking to buy a house or sell a house in Massachusetts or Connecticut or anywhere really. Doesn't matter. Doesn't have to be in Massachusetts. Anywhere. If you're just buying a house or selling a house, I should say,
worldwide,
let us know, and I'll make sure you're taken care of. So, okay, I think that's pretty much it. Thank you guys. Peace out.